Listen on for your step-by-step refi guide that will help you save money monthly and shorten the term of your loan. Everybody knows the word refinance, but what does it really mean? How do you actually get your own refinance done? It's something that we're going to talk about in this video. All 7 steps on how to complete your refi in the best way possible. Let's roll. A lot of people miss the opportunity to refinance their home, their mortgage, into a new one for a number of reasons. In some cases, it's a myth. But I have to start my payments all over again. But I've already paid in so many years and I'm starting over. Well, would you rather keep on paying more every month than start over and pay less? Would you rather pay for longer? Because actually applying your savings from the refinance, you can shorten your payoff considerably. Another most common urban myth and legend is I can only refinance when the interest rates are 2% lower than what I have. That, my friends, couldn't be further from the truth. And frankly, that originates back in the 80s, maybe 90s, when the loan amounts were so small compared to today. We're talking $100,000, $200 maybe. I mean, for $500 back then, you could buy a freaking mansion, okay? If you're like most people and you had a $100K loan and you refinanced and only saved 1%, yeah, that refinance really didn't do much for you in terms of the monthly savings. But in today's world, when average loan amount is more like 400 and change, 450 maybe, even a 0.5% drop in rate will save you a few $100 every freaking month. So you want to wait for that non-existent 2% difference, or do you want to grab the bull by the horns and save the couple of few $100 now? So here is your step-by-step plan, how you can be most successful with your refinance, no matter what goals you're trying to achieve. Step number 1, you need to know what your credit scores are. You have to have as high of a credit score as humanly possible. The goal is to be somewhere over 780. Hopefully you're in the 700s, but if not, don't despair. There are still things that can be done. When was the last time you had your credit score checked? When was the last time you actually looked at what's on your credit? Because typically people only look at their credit when they're trying to buy a home, a car, and that's about it. Check your credit first. I've posted multiple videos about credit, about how Credit Karma is inaccurate, how the bank credit apps are not really where you want to look. But for this specific exercise, and as part of your refinance plan, yes, you can actually check Credit Karma, although I would suggest that before you do that, you actually check something like Experian.com or your bank credit card apps or your bank app, because that will give you a better result or more accurate result than Credit Karma would. But at least it gives you a ballpark idea of what your credit scores are like, because sometimes you didn't think you missed a payment. You thought you were paying everything on time. And then lo and behold, you go to apply for some kind of financing and your credit score is in the toilet. Could have been a missed payment. Could have been the debt utilization. Who the hell knows? Not important. Check your credit first, because that will drive your interest rate and that will affect how much you can save on a monthly basis. Step 2, watch market interest rates. Not your local bank's websites, not your local credit union's websites, not Bankrate. No, hell no. Google them. Google and see what the current interest rates are. And the bigger the spread, i.e. the difference between what you have in your mortgage now to what the market rate is, the more savings you could realize. The posted rates, keep in mind that the average rates are just that. They're average market rates, taking everybody's credit scores into consideration. It doesn't mean that you will get that rate, but it does give you an idea of the mortgage rate trend. And that's what's most important, because if the rates are trending down, that's when you start considering a refinance. If you got a loan in 2023, for example, when the rates hit the highest levels in God knows how many years, I'd say 20 plus at this point, and your rate is right now 7.75, just throwing that out there. And now the rates are trending towards 6.75, for example, you should consider refinancing. You should really consider what your savings could be. Average rate could be 6.75. Your rate for your specific situation could be more like 7 perhaps, but is 0.75 of a percentage point enough based on your situation, based on your loan amount? It very well may actually save you a few $100 a month. Yes, you heard me right. A few $100 a month, depending on your loan amount. Step 3, determine your estimated monthly savings. Mortgage calculator. I'm sure you've heard me say this before, and I'll say it again and again and again. Google is your friend. You can also find my video about the Google mortgage calculator on my channel, by the way. You don't even need the instructions for it. You just plug the numbers in. So you calculate what your loan amount is, tack on, I don't know, 10 grand or so for closing costs, so bump up your loan amount, plug in the new interest rate, and that will give you a ballpark amount of what you could save between your current mortgage payment and the new calculated one. Step 4, collect your financials. You may think that I've gone mad. You want to have all of your financials ready because when the rates drop, you don't want to be searching all over the universe for your pay stubs, your bank statements, your W-2s, a copy of your ID. You'd be surprised. You want your financials in one place. The faster you can get them assembled, the faster you can get your loan application done, the faster you can have your refinance wrapped up in case the rates do go back up, which they have considerably in the last year and a half to 2 years. So you want to be ready, gather up your financials and keep them handy. Step 5, choosing the lender. Choose a lender carefully. The lowest rate does not equate the best option. The lowest rate does not equate the cheapest refinance, and the lowest rate does not equate the biggest savings. They could take 3 months to get your refinance done versus somebody with a slightly higher interest rate and better customer service and a 30-day turn time on the closing. Because the faster you close, the faster you can start saving money monthly. The longer it takes, the more you're risking missing out on the rate as well. So choose your lender before you actually make your loan application. That, my friends, is perhaps the most important piece of information that one could ever give you. If you're running all over the universe, applying at multiple institutions, eventually your credit score will suffer, especially if you don't complete that refinance process with a multiple of them. So choose your lender before you actually apply. Step 6, make your loan application. This one, shortcut for you. If you go back to the original lender who got you into your current home and your current mortgage, it's easy. They should be able to copy your application just on your request. So all you have to do is go back 2 steps and provide your financial. If you're going with a whole new lender, then make your application and once again, go 2 steps back. Having your financials handy helps you in completing that loan application in the most accurate and fastest way possible. And the final step, your loan officer, your financial professional, will review your options with you based on your application, based on the information you have provided. And once you determine what is the best option for you, all systems go, your refinance is off to a running start, and you can start counting days down till a closing date and starting to save on a monthly basis. So here you have the 7 steps to a successful, easy, clean refinance process. DIY, go for it. But if you do need the extra help and if you do need the hand-holding, comment below, reach out, and we'll hand-hold you from start to finish and help you with the process. Thank you for watching. I'll see you in the next one.